Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Yeah, so yesterday, very, I would say, right, something of a flatter day than something we're used to in the midst of this volatility trend. What does that necessarily mean for us going forward? Is this necessarily is this a sign of concern? Do we start to correct to the downside now? Does the volatility go away? What are we really looking at here? How does this fit into our current theses? What do we think are coming up with respect to some of our catalysts? And what is going on with XRT? That is what we're going to talk about today on today's breakdown. Before we do, always need to start out with our gratitude. So today's newsletter is brought to you by Jimmy Perp. Once again, thank you very much, Jimmy Perp, as well as to our monthly contributors, Datley Scruffdo. I like that. Dat Scruffdo, Ken Wedmerland, and Not Medical Advice. Many thanks, as always, for your support, and to everyone who has contributed in the past and will contribute going forward. Many thanks as well. So yes, so right, first thing I want to return to, maybe some of you who didn't have a chance to catch some of yesterday's video. You know, we still have these swaps coming up with Chewy, right? They were particularly important back in November. I suppose the big question here is, when are these going to come into play, if they are going to come into play? Certainly with respect to our price action into the end of this week, I'm more leaning toward it not happening this week, right? I'm more leaning toward if there is going to be something related to these Chewy swaps, however that might play out. Again, I will highlight that I'm not an expert in swaps, not by a long shot, but based on what I'm seeing in our options data, I would more or less anticipate that what we might see as far as something of a maybe bullish pressure related to these swaps would be something that would get pushed into next week, right? So what could it be? It would be something like a counterparty de-hedging event, so a counterparty which is hedged in order to make sure that they're going to come out on top no matter what on this swap, right? So if you have a total return swap, let's say you have the short party. The short party in that total return swap pays a premium to the counterparty over a series of months. So that counterparty, right, is happy to get the premium, and so they will hedge that swap, right? So they're the long side. They'll hedge that swap by having a short position in the stock, right, to offset potential losses based on the difference there. Or it could be through some other derivative. It doesn't necessarily have to be through the underlying. But in any case, when that total return swap comes due, equities are swapped back, right? Not only the premium is paid out, but then the difference between the swap securities gets paid out, right? That ostensibly doesn't then cause a movement necessarily in the underlying. That's just swapping securities back and forth. Nobody needs to go out and buy anything. But in the days following, the counterparty that hedged their long position by shorting stock or having some kind of synthetic short put together through derivatives can then close that position, which then will send ripples into the market and cause buying on the other side of that. So that's my vague understanding of how these swaps particularly work. And it does look like we had quite a lot of this type of action going on with Chewy and its correlation with GameStop suggested by Roaring Kitty going back into November and December. A lot of Chewy swaps scattered all throughout here may have been responsible for some of those curious moments of bullish volatility to the upside, combining with some copious fail to deliver settlement. Okay, so why am I not necessarily seeing something like that going on right now in our options data? Why am I thinking that going into the end of this week we might not see action correlated with that? Well, it does look like we're lining up for something a bit calmer heading into the end of the week. I mean, unless we get an announcement from Trump or something related, it doesn't so much seem like, China's upping tariffs now, but it's not, right? That like combined tariffs are getting over like 200-something%. It's like getting ridiculous between the US and China. But US equities are not really doing much, right? Like 2 days now, we kind of just chilled right underneath the 20-day moving average here. So it's looking from our options data in the broader market like, okay, we did get a little bit more bearish. There is still a lot of potential volatility on the board. We're below this kind of 540 pretty big put wall position here. But we're moving around here. If we got to get way up back like above 550, right? We got to get above 550, I think, in order to see something a little bit more stable in our gamma environment. And right now, it does seem like we're just going to hang out in this pocket here with kind of 530 to the downside as kind of our volatility trigger again. If we trip that, we've got some chance for volatility to ramp back up again. It is a little higher here pre-market, but it does look like potentially we're gonna hang out in this range. Maybe we don't, right? Maybe we go past that 530 mark, and then volatility comes back again, and maybe that ends up being something of a catalyst that brings GME a little bit down. I think a lot of this hesitation also has to do, we talked about it this week, we talked about it a little bit last week, and on the live stream, that we have this really huge put gamma expiry that is hedged by by options dealers by holding short shares, right? So they're short the index or related ETFs. They can be synthetically short as well. So they are short, right? Dealers are short at the same time that traders hold long puts, because dealers have short puts on their book. Short puts on their book that they hedge. They hedge the positive delta of those short puts by holding a negative delta instrument on their books, and that's very often the case. That's held as it's short shares in order to remain delta neutral. They also strive to be gamma neutral at the same time. So once these puts come off their books, then there's again going to be this on the other side of this. If there's not the same level of repositioning or rolling of OI into future expiries, then there's going to be an imbalance. Suddenly you're going to have all of this positive delta coming off the dealer's books, and therefore they're going to desire to reach delta neutral once again by closing out a lot of synthetic or just pure short positions on the S&P 500. So that could see something of a rally on the other side of this. But I think in the meantime, right, there's sort of this tendency to wait until that occurs. And it did seem like that's what we got by and large with our price action yesterday with GameStop. We just kind of hung out, right? It was really crazy tight. Volume was way down. I think we were, 6.7 million shares. So we were under our average. Volatility absolutely fell off a cliff from like 106 up here all the way down. I think we got close to, we went all the way down to like 92%. So we fell really far there into the close. Not typical for volatility. We are seeing more of this chop, but I do remember something like Ultimator saying that this type of phenomenon does occur when something is going on swap wise. So I have to shoot him a message or something like that. But that could have explained why we were so tight, man, especially in the last half of the day here. Like we barely even traversed the lower VWAP channel here, and it was tight. It was very tight. The one kind of episode we had was kind of earlier in the day. We had this little pop, never did figure out what that was. That caused a little ripple in the day, and then we just sat down here. So very, very hesitant. I mean, I wouldn't be surprised if this type of all of a sudden volume fall off, everything falling off, I had something to do with swap rolling or swap repositioning or something like that. Liquidity is fine lending wise on GameStop. I mean, as an institution who might want to control the price, I mean, I'm probably pretty happy with how many shares are available here. What's interesting though is we do still see this kind of seesawing with liquidity over on XRT. So XRT shares outstanding down to 4.8 million shares. I see. Look what happens to their assets under management. Like these shares are redeemed, right? So why do they go down? They're redeemed. The authorized participant is then going ahead and exchanging the units of the fund for securities, shares of securities, and cash in lieu of shares of securities. And then these can be used to refill lending supplies throughout the broader market of those particular securities. What we do see on XRT, though, is that available liquidity right during this period between 7:15 and 7:30 a.m. once again, in excess of 90% of the previously available liquidity on that ETF completely evaporates. It completely goes away, and then during the day pops back up. So Richard's been pointing this out too, right? That volume is nonetheless very high on XRT. So something is going on here. Some sort of musical chairs game is occurring in order to stay solvent or to stay in good standing with respect to how settlement is supposed to work here. Interesting to point that out. Right, so IV coming down a little bit. We're not really coming out of our chop phase, right? This kind of higher Volga area. I don't expect that to come down for a while. We'll have to see. Yeah, we'll have to see. What I do think is, right, I did sketch this out sometime last week, that I did think upon sort of just from a technical perspective, coming up to the 100-day moving average. That was going to serve as a good candidate for a bit of a reverse to the downside, something of a small correction. We did kind of stall there, right? So we headed right up there and stall. And then yesterday we were just stalled right on top of it. So if we do see a little bit of SPY move back to the downside, I wouldn't be surprised if that took us down a little bit with us. This doesn't jeopardize our overall bullish move to the upside, thanks to what we can see from our PMO. We should get a PMO 35. So this orange line cross with a zero line either today or tomorrow at some point. So that momentum does look like it's going to continue. However, we do see that in this recent move, we can see that options traders in the short term are taking profits on their trades. So we do have a fair amount of OI coming off the board at 26 and 25. Not so much down lower. We did have some put closures as well. Right, so options activity in general was lower, but yeah, we do see some profit taking there in the short term, and that suggests, okay, maybe get a little bit of cash, right? Take some profits, get a little bit of cash off the board in order to reposition for maybe something of a small move down and then a bigger move up thereafter as a continuation of our current trend. 2550 was an interesting strike. I wanted to call that out in particular. We saw just before 2 p.m., right around 145, we saw a pretty big long put position entered, close to 2,000 contract, maybe like 1,500 contracts. And then later in the day, that was then exceeded by a fair amount of short puts. So it's a net short put trader short put position here that expanded at 2550. It does suggest then that position net is going to offer a bit of intraday support. If we move down into our gamma data, we can see, yeah, right. So there's some weakening down here. 27 is still a decently sized position, but 2650, 26, obviously 2550 is now net put. But a lot of that now we know, or a fair amount of that is going to be short put. So it's probably a little bit more of a neutral strike, maybe slightly supportive, since actually a good portion of this net put gamma we should be adding over here to the call side. Ideally thinking about trader call GEX as dealer negative and therefore hedged positively. 25 has weakened a bit as well, right? We did get some profit taking there. I still suspect that this level, this area, is going to hold up into the end of the week. Max Pain has moved up to 25. Interestingly. So I would say, yeah, there's not a ton here at 2650 or 26. It does say stability in a lower volume environment, but it would be easy enough for us to just start kind of retracing slowly to the downside. Maybe a little bit of charm starts to set into effect from all of these out of the money calls we have. We could move up. To the upside, but again, I think kind of after that market maker less than ideal close last week, if we don't have something like more FTD buying occurring now, I think we're probably waiting until next week. I think we don't see too much movement until next Monday. We've got our meme dates there. We've got the whole 420 thing. Well, maybe we start to see some movement when the market opens. Right when overnight market opens, we got another single share from our mystery buyer, this time at 28.20, which doesn't quite point to any meme numbers except 420. Very interesting. Maybe we get another share like that tomorrow or tonight or something. So, I mean, still projected stability, probably trading in the 27 to 27.50 bracket, probably slipping a little bit to the downside. We're going to get charm setting in. This is the other thing, too. We're going to get charm setting in, this kind of out of the money call charm, putting that kind of constant downward pressure on the stock earlier this week because OPEX is Thursday, right? Friday is a market holiday. So we might start to see some of that pop up today, and that might be enough to kind of take us back down into maybe the lower 26s, the upper 25, something like that toward the end of the week. Not trying to be a bear, right? Of course, right? I mean, I still see bullish momentum for us here going forward, but just trying to temper my own expectations, try to be perspicuous with respect to what scenarios I've seen developed in the past, what I know about some of these hedging dynamics, what I've experienced with respect to some of these hedging dynamics. Just looking forward, I think that seems most likely for us. But good signs overall, right? Max Payne still moving up. Technicals look good with respect to that price momentum oscillator. So yeah, all in all, some very good signs. Definitely go check out, if you have a chance, go check out Richard's channel. I think he's probably going to talk about, we just got some new FTD data yesterday. So be digging into some of that. We can take a look at some of that, I think, during our live stream as well. Looks unsurprisingly juicy. We actually, interestingly, right, we got some pretty cool FTDs over on GameStop itself. Quite a few 100,000 there that weren't immediately taken off the board during this big, once the convertible bond offering was announced. So very curious. It's going to continue to be a pretty curious season of the stonk. So still looking forward to what emerges out of this Easter weekend. So yeah, we'll see you guys tomorrow morning. Let's see what the trading day has for us in store. Thanks very much, as always, for watching and listening, and we will catch you next time.